Exam Scholar, Real Estate Edition.
Question 1. A nonconforming loan is a loan in the amount over A. $147,000. B. $417,000. C. $500,000. D. $1 million. Answer B. Fannie Mae and Freddie Mac's loan limits are any loan up to $417,000. Any loan over this limit is known as a nonconforming loan or jumbo loan. Question 2. The Government National Mortgage Association, that provides funds for government loans like FHA and VA, is also known as A. Ginnie Mae. B. Ginnie Mae. C. Freddie Mac. D. Fannie Mae. Answer A. Ginnie Mae is the other name for the Government National Mortgage Association. It was created by Congress and provides funds for FHA and VA loans. Question 3. If a lender is issuing an FHA or VA loan, where does the funding originate? A. Ginnie Mae. B. Freddie Mac. C. Fannie Mae. D. From the lender. Answer A. Ginnie Mae is the name for the Government National Mortgage Association. It provides funds for FHA and VA loans. Question 4. Ginnie Mae is owned by A. The government. B. The private stockholders. C. No one. It is a non-profit. D. None of these. Answer A. Ginnie Mae, or also called the Government National Mortgage Association, was created by Congress in 1968 as part of the Housing and Urban Development Act of 1968 and is owned by the federal government. Question 5. The Federal National Mortgage Association is also known as A. Ginnie Mae. B. Fannie Mae. C. Freddie Mac. D. Freddie Mae. Answer B. Fannie Mae is also called the Federal National Mortgage Association. Question 6. Fannie Mae is owned by A. Shareholders. B. Private entities. C. The government. D. None of these. Answer A. Fannie Mae is a shareholder-owned company. Question 7. The largest supplier of home mortgage funds is A. Ginnie Mae. B. Freddie Mac. C. Fannie Mae. D. Private lenders. Answer C. Fannie Mae, also called the Federal National Mortgage Association, is the largest supplier of home mortgage funds in the United States. Question 8. Which of these is a congressionally chartered organization? A. Fannie Mae. B. Freddie Mac. C. Ginnie Mae. D. Both Fannie Mae and Freddie Mac. Answer D. Both Fannie Mae and Freddie Mac are congressionally chartered organizations. They are not owned by the government but by shareholders. Ginnie Mae is fully owned by the government. Question 9. When a buyer gives earnest money to a broker, the money is then put into A. The broker's bank account. B. An escrow account. C. The seller's account. D. None of these. Answer B. The earnest money is placed in an escrow account until the transaction is closed. When the transaction is completed, the money is then delivered to the seller. Question 10. Which of these is considered to be an encumbrance? A. A lease. V. A mortgage. C. An easement. D. All of these. Answer. D. A lease, mortgage, easement, or restriction is considered an encumbrance of a fee simple title.
Exam Scholar, Real Estate Edition. Exam Scholar, Real Estate Edition.
Question 1. An arrangement made to repay delinquent installments or advances is called A. Repayment plan. B. Settlement plan. C. Debt installment notice. D. Debt division plan. Answer. An arrangement made to repay delinquent installments or advances is simply called a repayment plan. Question 2. The amount of principal that has not yet been repaid is called A. The balance. B. The remaining balance. C. The outstanding note. D. The loan remaining. Answer. B. The remaining balance is the amount of principal that the lendee has not paid yet. Question 3. The process of paying off one loan with the proceeds from a new loan using the same property as security is called A. Refinance transaction. B. Resettlement transaction. C. Redouble transaction. D. Loophole transaction. Answer. A. This type of process is known as a refinance transaction. Question 4. This type of deed transfers without warranty whatever interest or title a grantor may have at the time the conveyance is made. A. Quitclaim deed. B. Warranty deed. C. Trust deed. D. Special warranty deed. Answer. A quitclaim deed transfers without warranty whatever interest or title a grantor may have at the time the conveyance is made. Usually used by family members, divorcing spouses, and people well acquainted with each other. Question 5. The payment change date is A. The date when a new monthly payment amount takes effect on an adjustable rate mortgage or graduated payment mortgage. B. The date when a new monthly payment amount takes effect on an fixed rate mortgage or graduated payment mortgage. C. The date when a new monthly payment amount takes effect on an adjustable rate mortgage or balloon payment mortgage. D. The date when a new monthly payment amount takes effect on an fixed rate mortgage or balloon payment mortgage. Answer. A. The date when a new monthly payment amount takes effect on an adjustable rate mortgage or graduated payment mortgage is called the payment change date. Question 6. What is the definition of a note in terms of real estate? A. A legal document requiring a borrower to repay a mortgage loan at a stated interest rate during a specified period of time. B. A legal document requiring a signature by both buyers and sellers that allows for the transfer of real property. C. A legal document requiring a borrower to repay a portion of a mortgage loan at a stated time in a lump sum. D. None of these. Answer. A. A note in terms of real estate is a legal document requiring a borrower to repay a mortgage loan at a stated interest rate during a specified period of time. Question 7. The interest rate banks charge to their preferred customers is called A. The prime rate. B. The preferred rate. C. The priority rate. D. The graduated rate. Answer. A. The prime rate is the rate the banks charge their preferred customers for loans. Question 8. This is given by a commercial bank or other financial institution for a certain time and certain amount. A. Line of credit. B. Mortgage. C. Note. D. Bank account. Answer A. A bank or other financial institution gives out a line of credit for a certain time period and for a certain amount. Question 9. This limits the amount the interest rate can increase or decrease over the life of the mortgage. A. A life cap. B. An interest limit. C. A mortgage cap. D. A fixed cap. Answer A. A life cap limits the amount of change the interest rate can fluctuate over the life of a mortgage. Question 10. This is a type of ownership where individuals actually own the building or unit they live, but common areas are owned jointly with the other members of the development or association. A. Condominium. B. Planned unit development. C. Planned condominium development. D. Apartment conversion development. Answer B. In a planned unit development, the individuals actually own the building or unit they live in, but the common areas are owned jointly with the other members of the development or association.
Exam Scholar, Real Estate Edition. Exam Scholar, Real Estate Edition.
Question 1. An index used to determine interest rate changes for certain adjustable rate loans is called A. Treasury Index. B. Rate Index. C. Adjustable Index. D. Interest Index. Answer A. The Treasury Index is an index used to determine interest rate changes for certain adjustable rate loans. Question 2. A written justification of the price paid for a property, primarily based on an analysis of comparable sales of similar homes nearby, is called A. A comp. B. An appraisal. C. A similar analysis. D. Neighborhood investigation. Answer B. An appraisal is a written justification of the price paid for the property. Question 3. The property that will be pledged as collateral for a loan is known as A. Security. B. Pledge. C. Promise. D. Collateral. Answer A. In this case, the security is the property that will be pledged as collateral for the loan. Question 4. The buying and selling of existing mortgages, usually as a pool, is called A. Primary market. B. Secondary market. C. Tertiary market. D. Market index. Answer E. The secondary market is the buying and selling of existing mortgages. They are usually sold as a pool. Question 5. Ingress or egress means the right to A. Enter or leave designated premises. B. Buy or sell designated property. C. Exclude or include individuals from a designated property. D. None of these. Answer A. Ingress or egress means the right to enter or leave a designated premises. Question 6. A tenant is excused from paying rent in the event of fire or casualty damage and the landlord receives uninterrupted income while the premises is unusable by means of A. Rent loss insurance. B. Hazard insurance. C. Rental insurance. D. Property insurance. Answer A. Rent loss insurance covers a landlord for lost rent in the event of casualty damage while the premises is unusable. Also, the tenant is excused from rent for this period. Question 7. The noting in the registrar's office of the details of a properly executed legal document, such as deed, mortgage note, satisfaction of mortgage, or extension of mortgage, thereby making it a part of the public record, is called a recording. B. Notation. C. Delivery. D. Registration. Answer. A. Recording is when the details of the properly executed document are noted in the registrar's office, making it a matter of public record. Question 8. A purchase money transaction is A. The acquisition of property through the payment of money or its equivalent. B. The acquisition of property through the securing of sufficient loan amount. C. The acquisition of property through the promise of sufficient collateral. D. The acquisition of property through the payment of equal property. Answer. A. A purchase money transaction is the acquisition of property through the payment of money or its equivalent. Question 9. What does PITI stand for? A. Principal, interest, taxes, and insurance. B. Property, income, taxes, and insurance. C. Prime, income, tenement, and insurance. D. Principal, income, taxes, and insurance. Answer. A. PITI stands for principal, interest, taxes, and insurance. They are the four components of a monthly mortgage payment on impounded loans. Question 10. The four components of a monthly mortgage payment on impounded loans are A. Principal, interest, taxes, and insurance. B. Property, income, taxes, and insurance. C. Prime, income, tenement, and insurance. D. Principal, income, taxes, and insurance. Answer. A. PITI stands for principal, interest, taxes, and insurance. They are the four components of a monthly mortgage payment on impounded loans.
Exam Scholar, Real Estate Edition.